Okay, folks, we are live and welcome to Sunday Night Futures Live, where we get together, we spend some time, and we take a look at the opening price action of the major averages. And tonight, what I want to talk about are the monthly charts. How did we close out the month of July? How did we open up, although it's just one day? How did we open up the month of August? So expect that today. And we have the futures markets, which are open. And before we get into them, I want to remind everybody, if you want, I have a hard stop at 7 o'clock tonight. Usually we go over. But if you want me to review your charts, head on over, enter the symbols here as Town and Sean have done. We have a bunch of other ones here as well. Let's get them up there. Tim, George, I'll share out the link if you're not already subscribed. No credit card required, no shenanigans. I'll put the link in the box there. And there we go. We are ready to get to it. Okay, let's say hello to folks as we watch the E-minis come off their lows, now positive. Let's say hello to Franklin. Welcome. George from Quebec. Welcome. Larry. Earthquakes, volcanoes in Russia, maybe divinity speaking. Could be. I don't like the rhetoric that's coming out of Washington and Moscow right now. Evening, Bob. Thanks. You're welcome, Tim. My pleasure. I saw it was trending on X, Twitter, and I saw a lot of bad information. It was scary bad. Corey, welcome. Sean, welcome. Danny, welcome. Hope everybody had an awesome weekend, and let's get to it. So the E-minis gapped lower initially, rallied back to go positive. Now you're seeing sellers move in here and bring it down towards the lows of the session. If we do break to a new session low, we're probably going to see volume pick up here. Let's just put in, yeah, we just did it. They just took out the lows. And look at the big selling here. I shouldn't say volume-wise big selling, but there are no buyers. It's pure sellers here, not a ton of volume. Let's take a look at the NQ, see if we have something similar. This is the NASDAQ 100 futures. They are down as well. Pretty much the same price action at the open. They did turn positive. Now they're coming under pressure. Let's see whether or not they take out lows as well here. They're a little bit more they're a little bit more firm than the E-minis. All right, so we have our alerts set. Talon, welcome. Hey, folks, if I can ask you to like, subscribe, you know the deal. Leave a comment, all that good stuff helps me out, especially with that UNH video. If you, I did a UNH video earlier today. I only released it a couple of hours ago, so I don't even think I sent it out by email. I posted it on Twitter, Facebook. No, actually just YouTube. Actually just and Twitter. I didn't do it on Facebook. Let's take a look at the small caps. Small caps, they're faring well here. Similar price action as to the NASDAQ and the Qs. I'm going to put my breakout point above here. EMD, the mid caps. Mid caps are down. Not a lot of buying off the lows. But again, folks, we need to keep in mind this is very, very thin volume right now. Sunday night, middle of summer. So there's not a lot happening here. So context matters. We don't want to be hyperbolic. That's not the business we're in. We are in the business of reality. Let's take a look at the US dollar, which sold off hard on the back half of the week last week. And we're seeing more selling. I mean, they continued the selling after hours on Friday, and it's continuing now. So this is good for commodity stocks. If commodity stocks do go up, or I should say, that's commodity stocks, commodities, if commodities go up, well, that could be deemed as being inflationary. But copper did not. As a matter of fact, I want to go to copper. Let's stick with the currency market so I don't get out of sequence here and forget to go over stuff. So let's talk about, let's go to the euro first. Euro, nice open here on the euro, clearly capitalizing on the weakness from the US dollar. And it looks as though we're probably going to go up higher. Here's a 30-minute view. Here's your higher low. And there's your breakout of a triangle formation. So euro looking good. Let's check out the yen. Japanese yen, very strong. Now, last week, the Japanese yen, let's go to the weekly chart and talk about this for a moment because it matters. Remember, the Japanese carry trade is a global liquidity source, right? So if you're wondering why these stock markets continue up higher, despite the fact that leading economic indicators are going down. I mean, there's a deviation here of leading economic indicators going like this and equities going like this. That hasn't happened before, not to this extent. The reason is you have the yen carry trade, which is still around and driving liquidity, plus the Treasury is pumping liquidity into the equity markets or pumping into the economy, and it's finding its way into the equity markets. So the week last week on the Japanese yen was very, very bullish, and we are very close, if not already above. We are already above last week's higher high. So at current, let me make sure I'm accurate here. The high last week, 6822. Yeah, we're already above to new weekly higher highs. Let's go over and take a look at energy. Wow, oil down here by nearly a percentage point. That's a big move. That's a big move for oil. 5-minute chart. Now, I'll tell you, right now, the second 5-minute bar, NASDAQ just broke the new session lower lows. We'll go to that chart in a moment. Let's just wrap up oil. So this inside bar here, 5-minute time frame, no new high, no new low, 1 minute, less than 1 minute left to go in this bar. Watch for potential rally here. And I want to know, I would be bullish on oil if we began to take out resistance from Friday. But obviously, if it breaks the new lower lows, then forget about it. It's going lower. Let's check back in with the NASDAQ. I want to check in with the intensity of the selling. We are now down 0.20%. So the bears are clearly in control here at the open. The bulls tried to put up a defense. I did not want to put that up there. Okay, I want to do this. Let's see if we break down to new lower lows. Okay, moving on. Sticking with energy, let's check in with natural gas. Wow, big move lower. No, actually, you know what? Retract it. The candlestick looks ugly here. I mean, if you're looking at a 15-minute, pretty ugly. The however is, I mean, it's only down a percentage point, a little over that. That's nothing really for natural gas. So we've seen much bigger moves than this on natural gas. So this is really a drop in the bucket. I mean, look at how much lower we were early on. Now, if this turns positive, this 15-minute bar, and we start taking out these highs here, all of a sudden what looks bearish now becomes bullish. Okay. Yields. Yields are a major factor in this market. We saw a major drop in yields last week, and they continue to drop now. What do we interpret from declining yields the way they're declining right now? Well, leading economic indicators are going down. Job openings are going down. And the jobs numbers on Friday were absolutely abysmal. I mean, normally for the past 5 years, what the Biden administration has given us has been a great headline number for the prior month, the month that's being announced, yet 1-2 months before that, they revised down quietly. And the talking heads on the financial news media, all they do is talk about the new headline. They don't talk about the revisions. So they want to keep the party going, right? Until all of a sudden the music stops, and the music may have stopped on Friday. So 10-year yield moving lower here, now down a little over a quarter of a percentage point. New weekly lower lows. Let's check in with precious metals. Gold moving up higher here, up nearly a half percentage point. Very nice. It had a nice day on Friday. Here's a nice bullish reversal bar on Friday. So it looks as though we're setting up here for a continuation breakout, probably new all-time highs, weekly view on gold. We're very, very close. All-time highs, $3,509.90 the ounce. We're not that far away. We could be there this week. Let's check in with silver. Silver up here, 0.38%. Coming off of its highs a little bit, but let's face it. Weekly chart. The trend is clear. It's defined. It's up. All we're doing is that we are stepping up higher, just as we did back here. Nice consolidation breakout. You have the same thing back here. Breakout. So this is still looking good. We are losing weekly momentum, though. I will say that that is a bit of a concern to me. But again, we can't short based upon weekly stocks declining. All we could do is minimize our risk by not being overly aggressive until momentum begins to move back up. Copper. I didn't do copper. Let's talk about that for a moment. Copper had a crash last week. I don't think it's hyperbolic to say that copper crashed last week. Major move lower. And what we're going to be looking for are lower lows here. I think there was an announcement during the Federal Reserve press conference that came out of the White House that impacted copper. I've been meaning to go in and do the research. If somebody knows specifically as to why, and it's accurate, of why copper took a nosedive, please enter it in the comments section. I think it had more to do with Washington. The continuation move lower on Friday makes sense to me because, you know, copper, they call it Dr. Copper for a reason. If you have strong economic data and there's an anticipation of growth globally or domestically, copper prices should go higher. They didn't last week. So what is copper telling us? Is there a story from Washington that could support the reason why it dropped so hard, or is this an indication of the demand for copper and the potential for a slowdown here, maybe not just nationally, but globally as well? We know the real estate market in China is only getting worse. So the situation in China is nearing very catastrophic levels right now. Europe is not that far behind with the social unrest that's going on over there. I've been watching that, and man, to my European friends, I feel for you, man. I really do. Let's check in with, we're going to go Bitcoin. We're going to do XRP in a moment. Let's take a look at agriculture. Here's the XRP futures. I want to buy XRP. We'll talk about a price target of as to where to buy XRP in a moment. Let's go back to comments. Bad news. How are the futures looking? Equities, no bueno. Crypto, no bueno. Lots of volatility in the currency space. There he is, the man, the mission. Pat, welcome. Calls expired on Friday. Will resell tomorrow. On what? What did you sell calls on again, Pat? I think you told me last time. I forgot. Polish Taco, welcome. That's the question I just asked. You know, there's an economic reason, and then there could be a tariff-related reason. Oh, and I think Tim may have. Paul, Canada. Oh, is that the reason for copper? Social unrest, lots of it. The EU. I'm trying to be sensitive here because I do go to Europe, and I do love it there, especially Italy, Ireland, France. But the people are they have a two-tiered justice system driven by the European Union, and they need to change those people, or they're going to change the people. Change the people or change the people. It's gonna happen one way or the other. There will be social unrest there with the immigration practices that are going on. Very, very bad stuff. Don't know if this is why copper fell. Effective August 1, 2025, the United States has imposed 50% tariffs on semi-finished copper products and copper intensive derivative products. Well, it sounds like a good reason. I got to think through bullishness or bearishness on that. Thank you for that, Tim. Yeah, I've been watching the videos coming out of the UK and Ireland in particular, and it's reaching the boiling point now. And nobody's reporting on it. You have to look on X. If you're not looking on X, you're not going to hear about this. It's just not going to happen. Nobody's talking about it on the mainstream media. Mr. Paul, welcome. QBTS. I don't even know that symbol. Good for you. Nice. Cash flow generation. Love it. Love it. Love it. Okay. That is the futures action. Let's talk about what's coming up this coming week. And in terms of economic data, normally during an earnings season, especially a busy week, economic data takes a backseat to earnings. That wasn't the case last week. Clearly, Jay Powell did not get it. He did not get the weakness in the jobs market. So he should have. He should have known that the government has been reporting false data for years now. He cannot, knowing that it's false data, he cannot hang his hat on saying he was relying upon government data. That guy's got more economic data than you could shake a stick at. He should have his own data. If he doesn't, a pox on his house because he's got two responsibilities. One, control inflation. Two, jobs. If you're not looking at your dashboard, then what are you doing? You're pontificating in front of the microphones. I mean that Friday report was abysmal. Normally, I support Jay Powell. I don't believe, given the data that we've seen economically, that we should be cutting rates right now. I didn't believe in the prior two rate cuts, but he did it to get Biden back into office. Didn't happen. So now it's a different game. It's a completely different game. You can't have jobs like this. Jobless claims revised down like this. I don't even know what the private sector report. That includes government, that revision downward. I haven't broken out the private sector. So coming out this week, factory orders, they're expecting a negative read. The prior read was a positive. This is a big pullback. Perhaps this is seasonal. So you need to compare year over year expectations. This could be logical. U.S. trade deficit. Nobody cares about the trade deficit. The 1987 crash had to do with the trade deficit. That's how important it was. Nobody cares anymore. S&P 5 final U.S. services PMI, Purchasing Managers Index, ISM services. I mean, we're barely hanging on by a thread here. You need to read above 50 to have expansion. The manufacturing numbers, that should be coming out this week as well. Where's manufacturing? They usually come out the same week. Where is it? I'm surprised. Okay. Any read above 50 is a sign of expansion, economic expansion in services. Any read below 50 is contraction. Manufacturing's been in and out of contraction for, 3 years. And services has been holding the U.S. economy up, even though it's low-paid workers. And if this goes negative, this goes down below 50, the markets are going to have to take notice of it. We're going to get initial jobless claims as we do every Thursday. Productivity, very important number. Labor costs, very important number. So if you see leading economic indicators going like this and wage growth going like this, that's stagflation. Friday, nothing to report. Let's talk about earnings coming out this week. Palantir reports on a Monday. Strange. Pre-market Monday, nothing important. Tuesday, Michael Anthony, I'm surprised he's not on here. He's a big Pfizer hound. And they report pre-market on Tuesday. Caterpillar, some additional energy stocks reporting. Energy reported on Friday. They were trading down on Friday afternoon. ExxonMobil, Chevron reported good numbers, and they traded down with the rest of the market. So there's opportunity here. So BP reports, Duke Energy, DuPont, Marriott. On Tuesday after the close, some tech names. AMD could clearly have an influence on the market. Supermicro reports. Snap, Rivian. I mean, these are more, not AMD, but Supermicro is in the S&P 500. So those are big cap names. The rest are not market movers. Before the bell on Wednesday, Uber. That should be interesting. The challenges they face forward-looking with Waymo or whatever that autonomous vehicle for taxis, and Tesla, what kind of threat they see there. Shopify, Disney. Disney released another horrific woke movie. It's the very definition of insanity, doing the same thing over and over again and expecting a different outcome. That's Disney. McDonald's reports. AppLovin after the bell on Wednesday. That's a great stock, but it has been very, very weak of late. Duolingo, I'm using that to learn the lovely language of Italian. Great product. DraftKings after the bell on Wednesday. Thursday, pre-market. Lilly, ConocoPhillips, more energy. After the bell on Thursday. SoundHound, that's really getting beaten up. Block reports. Twilio. And that's about it. That's about it. All right, let's talk about Fed expectations. Let's refresh this because it is changing rapidly. Now, the expectations for a September cut before the announcement of the jobs on Friday, it was improbable that we were going to get a cut. Now, 89% probability of a cut in September. I mean, they just hockey stick expectations right up on that report. October, 96%. December, nearly 100%. So it looks as though they're factoring in now probably 3 rate cuts. It really depends upon if they do a half basis point cut in September. Who knows? You have the two Fed governors that dissented. I don't know if that's going to influence the Fed's ultimate decision to cut rates in September, but it looks as though they are going to go in September now. Before the jobs numbers on Friday, there's no way I would have expected it, and neither were market participants. Let's go to comments. Pat, looking to buy Tesla, not for cars, but for AI. Okay. The lovely Jody, hello to you. It's all good. Palin, you're great people, awful management. Bingo. Great people, love the people when I'm over there. Well, I'd be careful on that Palantir. The Palantir just got a massive contract from the Army. I read about it over the weekend, so I would look in on that. It looks like they're still getting government contracts. Could be. I mean, these stocks are expensive. Let's face it. What's going on here? All right, it all began with Netflix. Netflix is one of the let's call it tech. The only reason why I'll call it tech is because the valuation is not the valuation of a media stock. So to me, it's valued as a tech stock, growth, etc. So we're going to throw it in the technology bucket, vast bucket, very diverse. So what happened when Netflix reported earnings? It was good earnings. What happened? They sold it hard. And that has been the trend with companies that have reported really good numbers, but they've been taken to the woodshed. I mean, Meta, Microsoft, Apple. Who else reported last week? I forget who else. Crushed on earnings. That's the Palantir Army contract. You see that? Good. TZ Burton, welcome. Okay, we did earnings, valuations. I mean, Friday was an ugly day, and I think some of the danger here for those that are not familiar with markets like this. When I say markets like this, I'm talking about on a historically significant basis, right? You had 2000, you had 2007 into 2008, you had 2021, and now what this is, an extremely expensive market. I don't care what it did on Friday. The market was priced to perfection. And when they release jobs numbers like they did, that takes the air out of a lot of balloons. And that could have been the pin that begins the process. I'm not saying we're going to go straight down and we're going to crash and whatnot. I'm not going to be hyperbolic like that. I didn't even add to shorts on Friday. We did well on Friday. I didn't go adding to shorts because I feared a potential rally back. I'd rather see the process play out. Lower highs, lower lows. The Stokes get oversold, come back up, put in a lower high daily time frame, and then I'll lean into the short side. The last time I added the shorts was, I don't know, a week and a half ago, and I added by a third. I probably should have only added by 0.25%, but I bit off a little bit more than I wanted to, and I think it's best right now. We have a good position. It's not a huge position. It's comfortable. Where right now I'm able to weather a storm, and if I see weakness on any rally up higher, and they look as though they're going to sell into it, I'll add more. So right now, comfortable. So stocks still very overvalued. This is trailing PE as measured by the Shiller PE ratio, 38. The Buffett indicator, we remain overvalued. I mean, we've only been here once before. That was back here in 2021. Prior to that was back here in 2000. But back then, we just barely pierced the 2 standard deviation move in terms of valuation. The last time we really pierced the 2 standard deviation was back in 2021. This time we blew past it. So now we're having a reversion to the mean, yet we're nowhere near there yet. Here is a historical trend. I'm not saying we're going to get down here, but the pain even get down to a 1 standard deviation move is going to feel like a market panic, or at least a mini bear market. Oh, okay. So here's the U.S. job numbers from May and June were revised down by 258,000, the second largest downward revision in at least 45 years. So, again, I always like to give the historical perspective. I could say revisions were made down, or they were revised down. But what does that mean? Well, on a historical basis, you better take this very, very seriously, extremely seriously. May was revised down by 125,000 jobs. June was revised down by 133,000 jobs. Think about this. In a $20 trillion economy with 350 million people, this was the job growth. 19,000 jobs in May, 14,000 in June. I got hair standing up on my arm right now thinking about that. So let's talk about the monthly charts. I'm going to blow through these quickly. And the reason why we do this is to appreciate how we closed out July and how did we open up August. Did we close at the highs of the month on the sectors or the products that we're talking about on these charts, or did we fade off the high, implying that we have sellers above? So that's why we take a look at this. And let's just have that macro view, that 100,000-foot view of the battlefield. So that way we know going into August how we want to remain positioned or change our position. So I'm going to kick it off with Bitcoin. I dollar cost average into Bitcoin, not a lot, but every Monday goes in there. Not a lot. And the trend is clear. It's defined. It's up. A little bit of topping action on the end of the month on Bitcoin in July. This month, inside month thus far, but it still looks very bullish. XRP, I'm looking to buy this. And the reason why I've held off, we'll come back to this chart. Let's go to the weekly chart for a moment. Actually, I can just go to the daily chart, keep it simple. So we were when I started looking at it, was back here, and we were very extended relative to the 3rd standard deviation Bollinger Band, and I couldn't buy it. Now it's looking a lot better. So I'll see how they open it up tomorrow. I'm going to buy the ETF. I think it's the Tetrium ETF. I don't know the symbol off the top of my head, but I'll probably be buying it tomorrow. So members, I'll let you know when I open up a position. I don't know if I'm going to dollar cost average into it, but I don't understand all of these tokens. I only invest in what I can understand. And XRP, let me backtrack for a second. The BRIC countries, China, Brazil, etc., they have a new payment system which settles like that. They're trying to replace the US-based SWIFT system, which is not so swift anymore. It takes days to settle transactions. So they need to change that. And what Bank of America is doing, they're going to XRP to help settle these trades or transactions in seconds, minutes. So XRP is poised to benefit dramatically. And I got to love the chart here. I mean, the pullback is healthy. I still love the monthly chart. I think they're going to break it out a lot higher. Yeah, we're going to go to the VIX in a second. I'm actually interested to see that chart, especially the weekly chart. I'm going to take a look at the weekly chart as well. We did it over the weekend, but I don't even remember. I got to go take a look. But wasn't those numbers suspect and will be reviewed by the current administration? Well, they fired the person in charge of the BLS. Now, I'm not aware that they're going to review. So I'll put it to you this way. I don't believe the numbers. I haven't believed the numbers for quite a while. So why did they fire that person? For inaccuracy? Well, if they're going to review the numbers, why would you fire the person before you review the numbers? How do you know they're worthy of being fired? So maybe they're right. The fact that there was such a dramatic cut in the prior read, I guess, yeah, that's a good probable cause for being dismissed. But Lord knows the Biden administration never did that. And not that I expect President Trump to lower his standards to Biden, but I just don't believe that. I'm sorry. I don't believe that these numbers are not real. I think that they're probably pretty accurate because we've seen this game over and over again. It's just that yes, it's flat now. Thanks, Pat. It's just that I think they're saying the quiet part out loud now. It's just my take. Think about it. Leading economic indicators going like this, job openings going like this. And if you take a look at the household survey versus the establishment survey. So the establishment survey was reported on Friday. There has been a divergence between the household survey and the I just drew a blank. The establishment survey and the household survey for years now. Before Biden, there was no diversion. They traded tick for tick to the upside or to the downside. Now all of a sudden there's a divergence. I got to pull up those charts off of the Fed's website, and we'll go over them. Maybe I'll do a Thursday night stock charts live this week, and we'll go over that data. If anybody's interested in that, it's worthy. Let me know. Leave a comment below. NASDAQ is now green, Pat. Thank you. So we have a reversal on the NASDAQ. We're flat on the E-minis. No great shock. They left the day oversold on Friday. Moving on. CRB Commodity Index. It looks as though we're going to break lower here. We had several months of topping action, unable to break out at one point in time. This looked very, very bullish, but they faded it. So at best, we remain in a trading range. And it appears as though we're ready to make new monthly lower lows. I mean, this is a pretty serious gap down in one trading day. I mean, look at that move. Woo! That's a big move. Down 1.5%. Yields. So yields on the month, last month, broke out fractionally. Now this month, they are trading down below last month's breakout point. The question is, NASDAQ just broke out to new higher highs on the session. Do we close here or do we rally back and proceed up higher? if we do, you could bet that the Federal Reserve is probably going to have at some point in time begin buying back long-term debt to do yield curve control. That assumes that the job data is not revised to the upside again, and they pretend that jobs are very, very strong. Looking at the TLT, attempted to break out last month, was rejected. We're back trying to retest a breakout point at around 87.90, around there. So I wouldn't be comfortable with buying TLT until we got closed above 90. That would be a good point at which maybe 88.50 would be interesting as well. 88.50, we have some resistance up there, and that's where your 20-month moving averages is hard to see, but it's in dotted red or brown line there. Tips, monthly chart. Doji star formation for the month of July. That is a tug of war between bulls and bears. We now have a new monthly higher high for the month of August. Therefore, the path of least resistance remains higher for tips, Treasury inflation protected securities. So think about it. You had jobless claims, non-farm payrolls that missed dramatically, yet you have tip buyers on Friday that were buying tips hand over fist. So they're not worried about deflation. They're worried about inflation, even though jobless numbers missed and were revised lower. So that's a concern about stagflation. And I think that's probably why you saw a reversal day on gold last Friday. We'll go to that chart in a moment. The US dollar. We have a major gap lower here. A huge month last month, closed right at the highs of the month. 27.50. Looks as though we have some support there. There was some resistance back in May and a rejection at that level in June, followed through to the upside and the closure in July. Now it's being retested yet again. Volatility, talent. So monthly chart, this is a spinning top formation in the month of July. Kind of doji star formation, a sign of indecision, but not as indecisive. This month, Lord knows where we're going to close. We only have one trading day in the books here. So it's very early in the game to pretend that we're going to know how the volatility index is going to close out. But I will point out that we've been holding, despite the fact that we sold off hard in June, July, stochastics momentum has not broken to new lower lows. The trend is up. That's a bullish divergence on volatility. And the same thing can be said of the RSI. So these momentum indicators are not validating the pressure, the selling pressure on the volatility index. Therefore, bullish. Weekly chart VIX. I mean, a massive bullish engulfing bar. And we close there. We close off the highs of the week, but bullish nonetheless. The S&P 500. Oh, pardon me. This is not the S&P 500. These are the number of stocks trading above their 200-day moving average. Very strong month last month. Headed into some resistance, historical resistance, and then so far this month, pounded. Completely out of sequence here. Sorry about this. Yen, big gap up on the month. Dollar weakness, strength in the yen. The Dow transports. Now, you can look at this in a couple of ways. One, through the bear lens, is that we sold off hard last month, almost went negative, yet we closed out, we eked out a gain. So the bearish case is that you have a tremendous amount of resistance above, which we do, The bull case is that we did in fact have a breakout of this downtrend channel. We could at current be doing a retest of the breakout point. And if it holds by the 1st of September, heck, we may be setting up for higher highs on the Dow transports. That's why I'm saying we can't go by one trading day and say, okay, we got to add to shorts. We have to be very, very bearish here. Got to be very, very careful. Uh, short selling is not for the faint of heart. So it's far more difficult than simply buying stocks and riding the wave up higher over the course of time. So from the Dow transports, we want to take a look at the Dow Jones Containers and Packaging Index. Why is that important? Well, it's an indicator as to whether or not we're going to be shipping more goods on the Dow transports. Kind of gives us a look at which way the transports are going to break. Are they going to break out or break down? Well, for the month of August, we've already put in a lower monthly low, and this candlestick for July looks eerily similar to that of the Dow transports. Refresh your memory here a little bit. They both look the same. This one, though, looks really weak. S&P 500 monthly chart. So we could say that Friday was a sign of the stock market getting ready to crash. That's the bear case. The bull case is that we broke out last month, new all-time record highs. And at current, this month is purely just a retest of the breakout point, pure and simple. Does it mean that we can't trade intra-month down below this support level and then ultimately trade above it? Sure, we can do that. We've done that plenty of times. But if we close down below this support level here at around, let's call it 6,200, if we close down below that mark, that's a breakout point failure, also known as a bull trap. We saw that back in 2007, 2008. We went to all-time highs, failed, and then we went into a major, major correction. Dow Jones Industrial Average monthly view. We have new monthly lower lows here. We're holding on to the lower band of support. Volume last month was very good. Triple Q's monthly view. New all-time highs last month. Now all we're seeing is a retracement, probably back down to retest this breakout point here. So can we head down to 540? I'll be honest with you, I'd be surprised if we didn't. It would be healthy if we got a retest back down to that support level. It held. Traders watch and they say, okay, it looks like this thing's gonna party. It's gonna go up higher, and then money will rush in. Right now, I think it's going to be a little bit hard pressed to see fresh money move in here with these types of valuations. Remember, a lot of stocks report. Wow, look at this. We broke monthly support last month. This month so far, this month. Doesn't mean we're going to close there, but at current, we are trading down below monthly support. IWM, monthly chart. They faded it, sold it off the highs. Volume was good, but a lot of that was selling. So, if equities were to go up right now, the stocks that should be going up with yields going down are the small caps and mid cap stocks. They have the most exposure to rising interest rates or falling interest rates. Rates are falling now. You would expect that they would be going up if equities were healthy. They are not. New monthly lower low on the small caps. Banks, very strong here. We do have a lower high. This is the second lower high on RSI. Could be just an orderly pullback. The trend is clear. It's defined. So still bullish on the banks. Technology, they got ahead of themselves last month. They tapped the third standard deviation Bollinger Band on the monthly chart. If you don't know what that is, I'll keep it simple. You're not supposed to be there. The XLK is not supposed to be touching its third standard deviation Bollinger Band. When it does, consider it to be like an electric fence. And we got rejected. No great shock. Last time you saw that was back here in 2020, and we had a couple of months worth of a pullback. Discretionary names. They pulled back after hitting the third standard deviation Bollinger Band back in December, and they've never recovered since. Obviously, they bottomed out. They're trying to put in a new rally here, but they have not gone on to new all-time highs. Energy stocks. I mean, I'm kind of worried about energy here. You're seeing oil move lower. Lord knows how it'll open up tomorrow. I mean, is this a bear flag setup? Is it a dead cat bounce and then we proceed lower? If we go into recession, the answer is yes. And I have exposure to energy, not a lot of it, but I have exposure to it. Figures can lie and liars can figure. Very true. Very true. And Patrick, Bob, what platform will you use? I use SoFi. It's just like it's stupid. I know. I have a Coinbase account. I can never get into it. It doesn't work on my authenticator. I got to talk to them about it. So I just buy. I used to own Bitcoin, but SoFi no longer is in the crypto business. So I was forced to sell it, and I bought the ETF. So I'll probably buy the XRP ETF Tetrium on that as well, and I'll probably ultimately dollar cost average. And again, it's just an account I just keep on the sidelines, and it just goes up. So it's like my Christmas fund, I guess. Yeah, I agree. Great saying. Agreed, Franklin. Definitely interested in the Thursday. Okay, we'll do it. All right, so it's official. George wants us to do a Thursday night stock charts live. We are doing it this Thursday. If you're not on our email list, join our email list. You can use whatever link below and hit that notification bell, that little dingy, and you'll get notified when we go live. All right, moving on. We're running out of time here. I have a hard stop. EM, emerging markets, topping action last month. I would avoid this for now. I want to be an aggressive buyer if we get a washout here in the equity markets. My favorite sector here, I shouldn't say sector, favorite country, IFN, India. They have positive demographics. They have a favorable workforce in terms of education. They're not a threat to us. They don't want to go to war with us. The Chinese, you can't say the same for them. So India will benefit as China suffers. We are pulling back here, but this fund is yielding 12.74%. Crude price, completely out of the sequence here. Crude prices, good month last month. Is this a bear flag setup? I don't know. But I'm wary. I'm suspicious. Therefore, I'm not a buyer of oil. Natty gas. Correction mode. No new monthly lower low yet. Support at $3. Gold. Lots of topping tails here. A lot of them. One would think that it could be a possible top. However, so far in the month of August, it looks pretty darn good. But it's only one day. So we have a lot of time to go before this candlestick closes. But right now, I'll tell you, if we blow through that 3,500 mark, you're going to see a rip your face off rally. You're going to see shorts cover. So bullish on the gold price. Gold VIX, not overbought, not oversold. just right. We thus far on the month of August have a bullish reversal bar. It was bearish last month. So we may see a little bit more volatility moving forward. But again, this is only one day that we're looking at. The price action on VIX for last month for gold was very, very negative. Therefore, bullish for the yellow metal. Gold stocks, these are the junior miners. Bearish month last month. So far this month, inside bar, no new high, no new low. I remain bullish on the mining stocks, especially if oil pulls back. Silver, a major, major breakout last month. I think that we are going a lot higher on silver. Silver, a major breakout here, monthly time frame. It cannot be ignored. The silver mining stocks, they trade along with the gold mining stocks quite a bit. So a little bit of a they're not correlated with silver as you might think that they should be. So when we had the big breakout a couple of weeks ago, it was the only time that I ever saw the silver stocks trade along with the metal. Usually they trade along with the gold stocks. Lastly, copper. Huge crash last month here. We've been here before. We'll watch it. Maybe there's an opportunity here. I don't like the lower highs on momentum, implying that we have a lower low. It's threatening. If we see economic data to continue to deteriorate, we need to avoid like the plague. You only want to own copper during economic expansion. All right, let's do some chart requests. Folks, we're going to be using our friends over at TrendSpider. So if you're not currently a member of TrendSpider, take advantage of my 35% discount code. Link below on YouTube, linked above on Twitter, X, and Facebook. So let's get to it. Okay, bull. Is that Webull? Yep, Webull. Weekly chart. Look at that topping tail. Wow. Weekly chart. Let's go to the monthly chart for a moment. I want to get a vibe for the macro view. Not much happening here. Short interest coming off quite a bit. I shouldn't say short interest, short volume. I'm a buyer on speculation, $12.17. Let's see what else is going on here. Daily time frame. Maybe it could sway me. Oh, I see what they're doing here. Here's irony for you. We closed down heavy on Friday, but believe it or not, we broke out. We broke out in time, meaning we traded outside of this downtrend channel, which is very, very steep. I think you're going to get a check back and a retest. It may get rejected. If it doesn't, I'd be a buyer above $13.50 per share. If it gets rejected, I'm a buyer down here at $12.11 on Webull. There's no compelling reason to go buying this stock right now at all. CCJ, Cameco. So finally, we got a pullback in these names. Let's go to a weekly chart. Let's bring up the Fibonacci's. No good there. We do have a lot of support down here between $64 and $58 per share. The ascending wedge formation is officially broken here. So I'm not a buyer. I think this rally appears to have run its course. I mean, if you bring up the Bollinger Bands, if memory serves me, we were flirting with the third standard deviation Bollinger Band at one point. Yeah, back here, pulled back, rallied. We came close back here, stalled out. Now we're rolling over. I'm a bystander here. I wouldn't buy it. I wouldn't short it. Let's take a look at seasonality. This company's been around for a while. 29 years worth of data. The month of August, it's a coin flip. For the next several months, coin flip on which way this goes. The irony here is that it did great during seasonally unfavorable months out of the year. So it just goes to show you, you can't solely rely upon seasonality. It's only a component. So I would avoid this. No short. I wouldn't buy it, though. TLT. We touched upon this earlier. Let's go to I know these are pretty noisy with all these lines. Let's clean it up a little bit. So I think this is firming up very, very nicely. The however is that we closed out the day on Friday right at resistance. So resistance is at around 80. This is the number I mentioned earlier, 88.50. We get a close above 88.50. I'm bullish on TLT. It's got to break out. We remain in a bear market. So bear markets are fraught with false head fake breakouts. So I would wait for a close above 88.50. If you get that, I would begin bull operations. Daily view. Now we broke out above one resistance level, daily time frame, on Friday. Watch for a retest. And again, 88.50 is that number we want to. So we get a pullback, rally, close above 88.50. Daily chart here is saying 88.65. In that neighborhood, give or take a dime. Then I become very bullish on TLT. Mr. Sean, ATOM. We had a rejected breakout. As a matter of fact, we had a bull trap last week on ATOM. Did we break out? Let me confirm that. It's so hard to see. Yeah, we did. We broke out. And they tried to retest it. Didn't happen. Wasn't having it. Let's bring up volume here. I want to see the type of volume that they sold into. It wasn't crazy. It wasn't light volume either. But I think that we're going to move lower, especially if we take out this low here. 451 will take us down to $3, the high threes. So I'm not a buyer here. I wouldn't short it either. XLRE. Strange. Another one with a bull trap. They broke it out the week prior to last. Last week it failed. I mean, we've been in this trading range, this triangle formation. Here's your upper band in green, lower band in blue. We've been in there for years, going back to September of 2022. And you had a failed breakout. So I'm not a buyer here. It's not a short. I'd be a buyer on a breakout and a close on a weekly time frame back above, 41.70 per share. But if we break down below 41.29, we're coming down here to retest the lower band of that trading range. When you're in a triangle formation and you get a breakout point failure, it's never ever good. Many times you retrace back down to the lower band of support, and many times you break and go lower. So be careful here on XLRE. And I think that is it. I want to thank you folks for being here. Like, subscribe. Oh, SoundHound for Tim. Thank God I refreshed. Avoid. No bueno. Let's bring up the Fibonacci's. No good. They're not going to help you now. Yeah, so I already had lines drawn up here. So they tried to take it out. It was rejected, and we broke lower. So it looks as though they're probably going to break lower here, down to around $8 a share on SoundHound. So I would be very, very careful with Soundhound. Right now, it looks as though the path of least resistance is to the downside. And if we break below the lows of March of 2025, we're going a lot lower because that would be a double top. Usually double tops are not this shallow relative to the prior high. But if we break to new lower lows here, I'm telling you right now, this stock's in a lot of trouble. So be very, very careful with Soundhound right now. I do not see the opportunity here. Maybe earnings will save it. The daily chart is not horrific. It's in a downtrend. It's fairly orderly. On Friday, we closed off the lows of the session on a very, very bad tape for the market. So, maybe you get a short-term squeeze here, but that macro view, that weekly view, that comes primary. You need to resolve this. You need a week. On Monday morning, you need to gap up. It's very simple. You need to stop going down, right? So you need to gap up here, and it's got to stay there. It has to close there. You get a couple of weeks worth of consolidation, and then a continuation move up higher. Well, then you have your higher lows, and then you get your higher highs. So it's not a foregone conclusion that we're going to break lower and retest the support level. It's implying it. But Mr. Market makes fools of us all once we pretend that we know exactly what's going to happen. So is it possible that we gap up tomorrow and we close out the week with an inside bar? Sure. Anything's possible. If we don't have an open mind here, we're going to go out of business really, really quick. So at current, this snapshot in time, it looks bearish. This time next week, I could be saying, you know what? It's firming up. So it's a fluid market. Everybody have an awesome remainder of your Sunday. Thanks for being here. Like, subscribe. You know the deal. And don't forget about TrendSpider, link below. Get that 35% discount code. Use discount code CON35, CON35. Have a great night. I'll talk to you soon. Be well.